Hey guys, we are going to talk about Tencent Stock and why I think this company is a great capital compounder for any portfolio. So this is second Chinese mega cap stock that I've covered now. I recently did a stock analysis on Alibaba and bought some shares in the public portfolio, so you should check both of those out and follow along my investing journey. And so a reason why I chose to cover these mega cap stocks in our portfolio and not your typical Apple or Microsoft is because I'm finding that there's value in buying into these companies when there's fear and uncertainty around them. And so let's take a look and see what we're working with here. How good of a company is Tencent? We will find out. So the company operates through 6 different key services. Their main service, communication and social, consists of 2 offerings, Weixin/WeChat and QQ Mobile, which are just absolutely enormous communication platforms used by users in China and all over the world. Their monthly active user base easily exceeds 1 billion, which is a good portion of the world. Next, there are utilities, which they are also number 1 in MAUs, then cloud services, where they are number 2, which I presume to be behind Alibaba, number 1 in fintech mobile payments and monthly and daily active users, and are also at the top for digital content in the form of this list. We have video, news, music, and literature, and last but not least, this service I believe to be their greatest strength as a company. Tencent is the owner of some of the most recognizable games in the world. You have League of Legends, arguably the most popular game in the world for the last 6 to 8 years, depending on how you want to count it. The computer-based game has over 155 million monthly active users, and the company also has a 40% stake in Epic Games, the creator of Fortnite. Tencent has gone all out on content creation in the last few years, having developed a large number of different games in a variety of different genres and on different platforms. They show no signs of stopping and are ranked number 1 in the world based on gaming users in China on both PC and mobile gaming, and are number 1 in the world globally by revenue. And the reason why I call this one of their greatest strengths is because the gaming industry has near unlimited growth potential. Esports is growing on all facets, from online streaming to merchandise to packed sports arenas to mobile downloads to being in the Olympics, and the legitimacy of being a professional gamer has come to stay permanently. Dominating the gaming space has and will continue to allow Tencent to deepen their economic moat as China's most dominant company. Next, we see an overall timeline of their revenue growth by segments, and it looks like since 2018, the company has had 13 consecutive quarters of top-line growth. And contributors by segment, you can see that their segment has increased by quite a bit over the years, highlighting what I mentioned before. Overall, it looks like every segment has shown some improvement except for online advertising. This, I think, may be a challenge for the company moving forward as the ad space is getting increasingly competitive, so I'd like to see what the company has in store for investors moving forward. Looking at the valuation of the company, Tencent is currently trading at 7.7 times forward enterprise value to revenue and 21.43 EV to EBITDA. And if you look at the valuations in the past year, the company has been trading at the lowest valuation since the March crash. And comparing to Alibaba, they are trading for 3.8 times EV to revenue and 17.47 EV to EBITDA. So Tencent is trading at a higher valuation, definitely, but to me, the company's moat of economic activities and services provides more growth opportunities and is actually in a more stable position than Alibaba at the moment. So I think it's reasonable that they are more expensive. Now onto the income statement. All figures are in US, by the way, and the top line growth of Tencent has been absolutely bonkers for a company this size since 2016. They grew their revenues from 19 billion all the way to 72.7 in just 5 years. Now, something that I noticed with a lot of these Chinese companies is that their margins have all come under pressure lately. We see 55.6% in 2016 shrink as low as 44.4%. And not only have margins been shrinking, operating expenses have increased quite a bit as well, but there are reasons for this. Number 1, the company has invested significantly to expand their services over the years. For example, just their gaming segment has released dozens of new titles in this short period of 3 to 4 years, and you see the sharp increase from 2017 onwards to explain this. So looking down onto the net income line, you can see that the company has achieved higher profitability every year, and 2020 was a fantastic year for the company. And so it will be interesting to see how the government crackdown affects this company moving forward. Now on the Q1 earnings, everything is in RMB instead this time. I won't pay too much attention to Q1 2021 to the previous year, but to the quarter before, just because I've noticed that January to March tends to be the company's worst performing quarter, and the year-over-year comparison to 2020 was during their COVID pandemic period, so we will just ignore that. So there's good and bad here. Revenue up 1%, costs down, gross profit up, which is okay. Interest income and other gains are down quite a bit. Operating expenses drops just a little, and this resulted in a 12% decrease in operating profits, so not great. And last, net profit down by 17%, which is definitely bad, a bad quarter for this company. And that's probably why their share price fell along with some headwinds. So it will be really important to see what happens in the next couple of quarters for sure. If you believe the company can improve, I think there is definitely some value to be had with this company. So onto revenue and share price projections. I took the conservative approach and really tapered the company's growth down. I only had them increasing by 7.5% in 2021 after a near 37% increase in the year prior. Longer term, I have them growing at or near the 20% level, then tapering down as we hit the back end of the decade. So the Tencent that we know has been growing much faster than what I projected here, but I'm looking to price in some of this uncertainty as well to give ourselves a better picture of what we could expect if things aren't super optimistic. And with the Chinese firms all pledging to increase on spending, I increased expenses to be in line with revenue growth, which was not the case in many of the years past. But I believe that with the heightened competition and increased uncertainty, costs are going to go up as the company will have to get creative and build on their other revenue segments to find additional growth. And on the bottom, we have share price projections. Right now, I have a 12-month price target of $94, and if you were to buy this company now at a price of $77.2, there is a potential 21.8% upside, which is a very solid gain. And looking out into the last year of this projection, I have a price target of $170. So when we take into account the potential gain from this investment, we get the total percentage return of 120.21%, representing an annualized return of 14.06. This is a stock that is set up to outperform the market in the next decade, and with the current weakness in the stock, it is looking more and more attractive. So I didn't cover much about the uncertainties that come with investing into Chinese stocks, but I did bring it up in one of my past videos that covered Alibaba, so you should check it out if you're looking to invest in these discounted mega caps. All in all, I love buying on weakness, and I think there's just a little too much fear going on, and it may be time to slowly build on positions of these stocks. Tencent to me looks like one of the most positioned trillion-dollar companies to be, and with their extensive list of services offered, there is safety in knowing that they will be sticking around.